So yeah, price action, one of the most significant concepts of trading which a trader must know from the start before he starts trading till the end, and should never forget about this one thing. But then if it comes to talking with personal experience, I never knew what was price action. I didn't even knew that a concept called price action exists. So then eventually after trading without knowing all this, after trading without gaining the complete knowledge, I ended up making much losses than much profits. So what happened is I knew I came in a conclusion I came to know that I am missing out something, because when people are making profits and I am making losses, there is something that is different between their action and my action. And I checked it out that what was missing, and I found out that the main fundamental concept, very important concept which has to be taught to every trader from this beginning, I missed it out, and it was called price action. So basically, what is this price action? It's a very simple process of the price moving up and down in the market house. So you see, in market, the price of any equity, single stock or a single company or the index on its own, like Bank Nifty and Nifty or Sensex, it keeps on moving up and down. It will never stay constant in a single pace. So what happens is, when the price keeps going up and down, eventually if you see in the bigger picture, it is either an uptrend or a downtrend. But then the price keeps moving up and down even in an uptrend. It goes up, it goes down, then it shoots up. It's not a single snap game, but it's eventually a gradual progressive game. So yes, in simple terms, if you say, price action is the process of trading the stocks or the index through understanding the price and the actions which the price will take in the near future. So basically what we do is, according to the action taken by the prices in the past, we decide what, or we predict what the price is going to how the price is going to move in the near future, so that we will take corrective actions and we can bag our profits. So one important thing always to keep in mind is, while trading, price will never move in a constant line or straight line. You can always see ups and downs in the price levels. It will never be in a single position. It will keep on changing. And when there is much volatility, the prices just shoot up and shoot down within seconds. That's the time where new traders have to just watch or observe the market and should not take a trade, because they are not as experienced as the expertise traders are. Even if it is a downtrend, the prices go up and down, up and down. It will never be always, you can never exceed a price going always down in a straight line. So what happens is, this is the results of continuous entry and exit of the bulls and the bears. That is the buyers and the sellers. Each time, each second, each and every new bull and new bear, that is each new buyer and seller, they keep entering and exiting the market. So as a result, the price seems to always be fluctuating due to the demand and supply forces. So you should always, while trading, you should always check for a trend. You should identify a trend as quickly as possible. So you should either identify uptrend or downtrend, or you should identify and check whether the market is behaving sideways. So you see, when the market is behaving sideways, it means that the market is stuck in a constant segment. It moves up and down within a constrained limit, that is the resistance, the constant resistance and the constant support. It keeps hitting the resistance, support, and ultimately the market is stuck within a single segment and it is not observed to moving. At this time, many new traders, they lose hope. They don't value their plans, trade plans, etc. They take up more emotional decisions, and then me myself, I used to take up much more emotional decisions when the market behaves sideways. I used to lose hope. I used to get my emotional balance would be disturbed, and I used to make much more worse wrong moves, and I used to end up bagging losses much than my profits. So this is called market consolidation. You have to wait until the market is completely consolidated. Only then you have to take action, because when you are a new trader, you don't know much about the market. Yes, I agree that you know a little bit about the market, but you don't know much about the market. What we have to explain is very simple, that price action is the process of traders taking actions according to the movements of prices in the market. So they utilize the charts and they analyze the previous price movements of the index or stock, and then they predict the future price of indexes of the prices of index and stocks, and then they take their actions. So there is something called analyzing and identification of a trend. So that how do you identify a trend? There is something called high, low, high, low, high, and lower, low. So I know this all sounds very new and very complicated, but then you guys can take notes right now, or else if you're not in a situation to take notes right now, then you can either text to the number which I mentioned in description. It's me. I'll personally contact you guys every time, and then I'll provide you with the material. So all this for you guys. If you guys found this video at least interesting and informative till now, I mean, it is going to be informative in the next, the forward section. But then if you guys want to gain more material and just keep going on, learn new things, then you guys have to support me by liking the videos and subscribing to the channel. So yeah, how to identify a high upper trend. So if there is a new low formed and the new low is higher than the old high, then the market is in the uptrend. So basically what I'm trying to say is, when you see an uptrend, how to identify uptrend is when the low of a candle is above the low of its previous candle, then it indicates that the market is going in an uptrend. And when the low of a candle is below the low of the previous candle, then you have to wait until the market gives you a confirmation. That is whether is there going to be a bounce back, or is it really a downtrend. And how do you identify downtrend? If the high of the candle is lower than the previous candle's high, then it indicates that the market is going towards the bottom. That is a downtrend. And if the high is above the high of its previous candle, then you have to wait until the market gives you a proper indication, a proper confirmation. Or else, if it should be a bounce back. That is called an upper trend. Because sometimes you see the high will be higher than the previous candle's high, and the low will be lower than the previous candle's low. So this might be very confusing for some traders, in fact even for some expertise traders. So yeah, you have to wait for a consolidation result given by the market. So you see, when you are particularly going to trying to identify a trend, one thing you have to keep in mind and never forget that you have to check for sustainability. So I said, like, when you try to identify a trend, uptrend or a downtrend, after the market shows you a breakout from the resistance or the support, what you have to do is you have to wait for the market to form the next consecutive 3 to 4 candles. You just shouldn't take the trade as soon as the market shows you a breakout, because at more cases it can just result in a false breakout. So what you have to do is you have to wait until the market gives you a proper confirmation, and you have to check for the sustainability in the price action. So as you see, you can check for the sustainability not until you can have some charts to read, right? You need charts to read the action. So what you're going to do is you have to wait for the market to form the next consecutive 3 to 4 candles, and you have to check whether if the high of the candle is above the high of the previous candle. I'm not talking about just 2 candles, I'm talking about consecutive 3 to 4 candles. And if it is a support breakout, I'm not talking about resistance breakout now, I'm talking about support breakout. In that case, if the low of the candle is below the low of the previous candle, then it is a downtrend. If not, it might be a false breakout. So I'm not saying it is a false break, it might be a false breakout, because sometimes even after a false breakout, the market may show a downtrend, but if the sellers decide, right? So the price all keeps moving according to the market forces of supply and demand. So most people ask one question to me when I say that I'm a trader. They ask me a question, then just explain me why do prices keep moving up and down. So it's a very basic economic concept that when there is excess supply in the market, then the prices tend to fall down, and when there is excess demand in the market, the prices tend to shoot up. So it's a very basic economic policy or economic concept that everyone has to know. If you're a commerce student from your high school, then of course you know. So the same way, just consider me as a seller. When I sell all the holdings, when I'm a big seller and I decide to sell my holdings in large quantities, what happens is I push up supply into the market, because all that I had, I'll give it to the market, and the supply in the market increases because I'm giving something to the market from my side. So what happens is the supply increases and it becomes excess because the demand has not increased, and this results in the fall of prices. And if just consider me a buyer, so what I'll do is when I get a decent price for a unit of stock or the unit of index, what I'll do is if the prices are low, then I'll try to buy more. So what happens is when I buy more, then I'll create excess demand in the market, because I need more and more from the market. So I take more and more from the market, and the demand for the units or holdings gets increased. So as a result, what happens is the excess demand forms and the prices tend to shoot up. This is what happens. This is why the prices keep moving up and down. This is a very basic economic policy, but most people, I don't know for what reason, find this difficult, and I'm not blaming them because they might have not learned this in the right way. But yeah, I have tried to explain in the right way. So this falling and rising of the prices, it is decided by the market forces of supply and demand, the entry and exit, and the game between the buyers and the sellers. So this always happens. I'm not saying that price will never change. Price will always keep changing. It will never travel in a linear path. It will always show movements upwards and downwards. But then there's nothing to stress about it, because I've told you guys how to analyze and how to make a clear path out of the trend. I told you resistance and support. I've told you there's zones, they're not lines. You have to take a small bit of area to consider, because there might be breakouts, but they may also result in false breakouts. So all this information I've provided to you guys in this video. So what you can do is, as a guest or as a thank you, you can subscribe to my channel, you can like this video, and if you really liked it, if you can share it with your friends, and stay tuned. And I have mentioned my WhatsApp number in this description. So what you guys can do is, you can text me anything in the message, and when I see your message, I'll try to reply. You just have to mention that you've seen my video, and you just have to say that you're from a part of traffic from YouTube. So what I'll do is, I'll provide you with the material for this course, the price action course, the free material. I'll provide you with it. So let's meet you guys in the next video. Till then, stay tuned. I'll catch up with you guys in the next video. Thank you.